o'clock right now. We'll give everyone just another minute to get logged in, and then we'll go ahead and again mute your microphones except for Charlie and Brent. That would be great, and we'll jump right into it. So welcome to everyone that's joining us today. Looks like we have about 20 people that are on right now, and I'm sure we'll have a few more people that join. We're obviously in a pretty difficult situation as an industry right now and as an economy. And this CARE Act that was announced on Friday is a tremendous opportunity for all of us as small business owners if we apply properly and if we are able to take advantage of it properly. And obviously, there's been a lot of confusion. Several of us are part of a couple of different networking groups that have been sending emails around and information. And literally, things have been changing by the hour, by the day, over the last few days. But it seems like it's pretty much settled in now. So I have the fortunate situation where Brent and I have been social friends for a few years. Our younger sons are friends from school, and Brent was already working with me over the last few months for a working capital line of credit. And we'd been talking about some different opportunities and things that we could do in that regard. And then when this whole thing started happening over the last few weeks, and all of these opportunities with the CARES Act started coming out, or rumors coming out about the SBA recovery opportunities and things like that, I started calling and talking to Brent. And then over the weekend, we talked about the idea that potentially we could do something like this for DFA members to try to get some clarity for all of you, and also give you a potential path towards having someone help you make sure you get your application turned in properly. So our two presenters today, and again, for the people that are just joining, if you can mute your microphones, that would be great. So our role in the DFA in offering this to all of you is that we just want to give you context. We want to give you the facts as much as we possibly can. We aren't necessarily endorsing Brent or Charlie in terms of the services that they're offering, but they do have a service that they can offer that can help you and advise you through the process if you need help and advice. And they're going to give you other ways that you can potentially apply for this on your own also if you want to. But we wanted to at least give you all the information that you could possibly get. And obviously, as the DFA, we wanted to provide this to you as DFA members first. So like I said, we are recording this now, and we'll be sharing the recording with non-members later today that have expressed interest in participating today. But for the question and answer session that's going to take place, we're going to have a 10, 15-minute presentation. And then we're going to go right into questions and answers. And I'm envisioning that'll take up at least a half hour or so of time. So when you have questions, if you can type them into the chat, I'll try to call on each of you visually as much as possible so that we can keep it in some sort of orderly fashion. We aren't all talking over each other as we're doing it. So just some background for you. Charles Snyder is a principal with Upland Business Capital. They're based on the East Coast. He's been providing debt and restructuring and turnaround consulting services to middle market, family-owned and privately held companies across the U.S. And to the tune, I think he was telling me this morning, he's part of the SBA Gold Circle, which means he's essentially doing hundreds of millions of dollars of SBA loans every year. So he, in a direct link to the SBA, and is very knowledgeable about what we're talking about. Brent Celestin is the other person that's presenting today. He's the principal of Full Court Advisors, which is based here in California. Was in my area in Palos Verdes, but I'm very jealous. He moved his family up to wine country in Santa Barbara at the beginning of the year and is living up there in the country now, which is probably a pretty darn good place to be right now. So Brent has raised debt financing and provided turnaround consulting services to middle market, family owned and privately held companies across the United States for the last 13 years. So the two of them have now come together to try to create a service for small businesses like all of ours to help us navigate this CARE Act and to make sure that we are getting all the information that we need and filling out the applications properly. Because if you send in your applications and they're properly filled out, it's going to greatly elongate and make the process much more difficult. So you want to make sure you have it right the first time when you send it in. So that's part of what they are going to be trying to share with us today. So I'm going to attempt to share my screen now. because we were having some technical difficulties. And I'm going to mute my microphone at the same time and let Charlie take it from here. So Charlie and Brent, welcome to the Decorative Furnishings Association.
Great, thank you.
Thank you.
There we go. So can we go to the second slide, Joby? Perfect. The first part of the presentation is to give you an overview of the two main programs the SBA has introduced in the last week. Because I'm getting questions, I'm getting phone calls about both. What's the difference? How easy are they to apply for? Is there loan forgiveness or not? So I'm going to take you very quickly through the PPP program, which is the Paycheck Protection Program. First off, I should say, CARES Act allotted 340, we say 50, but it's $349 billion to the SBA for these programs. The PPP loan amount is up to 2.5 times the average monthly payroll costs, not to exceed 10 million. The federal government, the SBA, will guarantee the loans to small businesses. They're provided by an SBA preferred bank lender. So what that means is that the bank is not going to require a personal financial statement or personal guarantee because the SBA is guaranteeing 100% of the loan. So it truly is just a payroll loan. They qualify small business now as 500 or fewer employees. And the key to this program, and I think what makes it attractive for a small business, is the loans can be forgiven if you maintain your payrolls during this crisis and or restore the payroll afterwards. The portion of the loan that can be forgiven and the qualifier now, and this came out yesterday morning, and it touched on something that's really important, is this is still a work in progress. There's still a couple questions asked of the SBA. They're still trying to define. We haven't seen what loan docs will look like yet. We just got the application yesterday. But what's important to note is applications will begin to be processed by banks tomorrow, April 3rd. So let's go back real quickly. The piece that can be forgiven is under this program, it's 75% of loan request is related to payroll and payroll cost, tax, that kind of, and they're qualified to be completely forgiven. Other 25% can be related to healthcare costs, rent, utilities, those kind of. And there's more to it than this, but your term at a 0.5 point interest rate, and the loan payments would be deferred for the first 6 months of that period. What I think is critical here, and as I've worked through with a number of clients, is that I would present the loan package knowing that I want at least 75 to 78% of my loan request to represent payroll. Reason being is the banks are really not interested in rolling it into a term loan and having to track that. So from the standpoint of also getting the approval quickly, the more that's in for full forgiveness will be more attractive to that lender. And in the big picture of things, what's important to keep in mind is I have one lender and I work with 6 preferred lenders across the US, but one I talk to him every day. And one of the things that they said was, if the package comes in and it's not complete or correct, it'll be pushed aside. If it comes in and the forgiveness is in place, they're less interested. They don't want to manage this. They don't have the capacity to manage these kind of programs. And for instance, I just saw an email that came from Chase, and Chase is looking not to participate in this because they don't have the administrative back office at this point to be able to participate in it. Again, forgiveness will occur at the end of the PPP program. Deferrals are there. It gives you the opportunity to bring in, cover your payroll. What they want to do is maintain jobs, keep people working, or restore payroll. A couple of things that are included in this program: 1099 employees, part-time employees.
Charlie, sorry to interrupt. If everyone can please mute their microphones. I think someone has an iPad Pro that isn't muted, and there's a ton of background noise. It's making it hard to hear him. So if you could please mute your microphones, that would be great. Thank you.
Okay. Well, just going back to it, the uniqueness of this is they want you to be able to have 2.5 months of full payroll to compensate your employees and keep them on the payroll. What's included: payroll, mortgage interest, rent payments, lease payments, utility payments. There's more to that, and we can supply you with the qualification and document request lists as well. Personal guarantee, collateral not required. Are not required at all. Again, really big because you're not putting anything on the loan. The second program that was introduced is called the EIDL, and that loan amount is up to $2 million, and it's offered directly by the SBA. You apply online at sba.gov. The difference, obviously, is the first program, since it's 100% guaranteed by the SBA, everything's being processed and approved by a preferred lender. The second program is going through the SBA, and last Wednesday through Friday, their site crashed and was overwhelmed 2.5 days of that time period. So I think the first system, if you have a preferred lender that you can get the package together go through, I would do that. The second piece that's important is there's no loan forgiveness on the EIDL program, where with the PPP there is. And again, the uses are the surplus, payroll, fixed debts, accounts payable. In this case, what they're going to do is they're going to make it a term loan up to 30 years at 3.75% fixed, but no forgiveness. So what's critical here is the ease to apply. You know, do you want your business to take on additional debt? I anticipate the programs may take about the same amount of time to process, and we'll talk about that in a second. But I think the path through the PPP will be easier to work through.
Charlie, can I chime in here? There is a provision in the EIDL for a $10,000 grant, which might not but pursuing PPP, that PPP funding for the preferred lenders, we're suggesting that borrowers forego the grant opportunity. It's going to be in your hands as long as until the PPP funds are available.
If you qualify under PPP, let's say for $90,000, and you were to get the $10,000 to people that can't, it's a standard government requirement. In many cases, if you're using a payroll processor, they may in fact have those records because they did that on your behalf. They should have shared it with you, but like that, they'll have that for you.
And so their payroll registers and other mailings to the company, you should have those records already on hand.
Right. And what they're doing here, the critical part of the program is verifying that you made payroll payments. So the money you're going to borrow is going back to replace what was missed during this time frame, but that you have over 4 quarters made consistent payments to 25 employees, that kind of thing. They also want to look at, to justify the business, the 12/31/2019 internal year-end financial statements. So many tax returns won't be done yet, and even accountant prepared with the COVID situation, internal or accountant prepared financial statements are not yet available. So they'll work with internals. And then as well, a 229/20 internal financial statement. The primary qualifier for the program is to go back and look at the same period during 2019 and come up with an average monthly payroll cost. And they'll take that cost. So let's say payroll was $100,000. They take the multiplier times 2.5 and you qualify for $250,000. And there are the little subtleties to the qualification, but that's kind of the generic, that's the formula.
And when you, if you were to see the application, and when you see the application, right underneath the company block, stationary block, they ask for what your 2019 payroll was. And I believe it's by quarter, and that they get to a total, then, and it moves through there, but it's a fairly straightforward calculation.
Right. Okay, next screen, Joe. So here are what I consider the keys to securing the PPL loan. Again, as the bank told me, receipt of the completed application and correct information is critical. Otherwise, the loan application will be set aside. It won't go into the queue. And I had one bank tell me they could wait 2 or 3 days to get back to those. So that part of it's critical. Verification of the information prior to submission to the lender. You want to make sure that everything that you're putting together is true and correct for their request. That's critical. One of the things that's important that we provide is, in working with 6 preferred lenders, we're presenting the packages to credit underwriters and decision makers at a much higher level. So if your decision is to work with your local banker, please make sure you have a comfort level that they understand the program, they understand how to process the application and the qualifiers. I've had a lot of conversations with different people, and the messages are all slightly different. So that's going to be critical as well. Can the bank really process it correctly for you? And just because you're dealing with Bank X doesn't mean on this program that you can't go to Bank Y. It's important to make sure that you're comfortable that this will get processed as quickly as possible. Sources of loan packaging and lending options. You have direct to preferred SBA lenders, both bank and non-bank. Consultants can help you, accountants can help you, attorneys can help you. What I've found that I'm working with are primarily accountants. Many accountants will say, you know, we understand the program, we can put it together, but can you validate? Can you check and make sure that we've presented the correct information? And that's, again, it's the most critical thing. Next slide, please. So closing, this is the big unknown right now, but based off of conversations with a number of lenders, this is kind of what we've put together. And there could be changes by tomorrow. There are 2 additional pieces of information they didn't ask for yesterday, which is documentation of your organizational documents and a driver's license. So those 2 things they now want to see. Application submission begins tomorrow, April 3rd. Most banks are saying it will take 3 days to review the applications. One of the things to keep in mind is most of the people that will be getting these will be going into a portal around, and they're trying to process these things. So it's going to take longer than I think a lot of people realize. Bank response back to the borrower could take 2 to 3 days. Estimated time from application submission to approval, 5 to 7 business days. So,
Charlie,
yeah,
yeah, Charlie, mention your concern about the background checks and the timing of that as it
well,
pertains.
we're gonna, that'll come up in just a second.
Okay.
One of the things we're doing that's very important, and again, if you decide to do this directly, is we put together a cover page that provides color and provides background about the business. Because one of the things we try to do is eliminate a phone call from the lender just to review basic questions. I want to answer those up front so that if they call me or they shoot me an email and say, can you answer these 2 things? I want to take care of the easy stuff up front. So that is a color piece that talks about the company, how long they've been around, what the customer base is like, the big question they've all said. So post the downturn, what will this money do, and what's the business outlook look like? Because part of what they're also trying to do is collect data for the next program that'll be introduced sometime in June. That will be the follow-up to this. This is the Band-Aid, but they're going to come out with something to further help small business to get, move forward and keep things going in the right direction. Upon approval and acceptance by a borrower, the bank lender must conduct a background legal search. Normally that can be done in an hour. Today, it's going to be 3 to 5 days because the firms that provide that will be inundated with work. So, now when that comes back, there'll be loan documentation preparation in another 2 to 3 days. So estimated time from application to receipt of the loan documents to you for review could be 10 to 12 business days. It may be a couple days less, could be a couple days more. But again, this is where everything's kind of floating based off of demand. Once receipt of the signed loan documents are back to the bank lender, you're somewhere in 3 to 5 days. So estimated time of application to closing is somewhere between 16 and 18 business days. Again, plus or minus. 2 major factors affecting the process are the number of existing client application the bank's processing and how long it will take to get the legal searches back, because that system's going to be overwhelmed. But keep in mind, if the local bank already is processing 500 to 800 of these, they will give priority to their existing clients before they take outside applications in. So one of the things I would say, and I'm doing this with a couple of clients, I'm still reviewing the package, but we're using their existing bank. And that's fine. And there's our contact information. If you have more questions, follow up. The applications are available online, but we can send you just a summary that encloses the application as well.
All right. Thank you very much. That's a lot of information and a lot to absorb. I have one question before I open it up to everyone else to ask. Originally there was, and you mentioned it in one of the slides, and I know you and Brent and I talked about this earlier this week. Originally, the rumor on the street was that it would be a combination of payroll and all payroll related expenses, including benefits, healthcare, rent, and utilities, and that all of those would add up at a monthly average times 2.5. And then that's what you would be eligible for, and that all of those things would be potentially forgiven at the end of the 8-week time period. So what changed with that? And if you could maybe clarify a little bit more again how those other ones, like how if the loan amount is based on 2.5 times your payroll, how can the payroll only end up being 75% of the total that's forgiven? Because isn't it based on the payroll
what
anyway?
What they're saying is it needs to be, so the other 25% can be the utilities, the other expenses, but they want to see that of that. So if it's a $100,000 request, that 75,000 of that is related primarily to payroll.
Can I add to that? I'm sorry, Charlie, finish what you're saying.
No, because what they did when the program was first announced, they had thrown out that the piece not forgiven would be termed out over 10 years at a 4% rate. And what they found was too many of the potential borrowers would have a large piece that would be termed out. And this created a tremendous amount of back office tracking and work for the banks. And the banks said, we can't do this. So then they changed from Tuesday night to Wednesday morning, where they raised the payroll requirement to 75%, dropped the term to 2 years, dropped it to a half a point. So the incentive is to get the whole thing forgiven. And they want to focus more on forgiving the payroll costs than fully the other expenses. Because this is a program to replace payroll, not to replace just expenses.
So can I add, Joby, that the loan amount is a function of 10 weeks of average pay for last year at a very high level, but the amount that's forgiven is payroll over the coming 8 weeks post funding. So there's going to be a difference between the 10-week average pay and 8 weeks of pay going forward.
So
for things like
one way to think about it then as a small business is I should focus on the people that I know I want to keep that are going to add the most value to the company going forward. Maybe this is a little bit too maybe cutthroat, but if there's people that aren't going to be adding value to the company, you can still take out the loan based on the average from last year if you had more people last year. But then the amount forgiven is just based on the people that you have over the next 8 weeks, correct? So you could potentially end up with more money than what you need to cover payroll, but you can just use the rest of it then for other items, and then you just have to pay it back at the 0.5% over the next 2 years.
Correct.
Okay.
So one of the decisions of the borrower is, do we want to focus more on the payroll amount and less on the expenses so the whole thing can be forgiven very easily? Or do we want to add that other piece in, so knowing that we may have a little extra to cover costs, but it's not forgiven?
Because I think a lot of us in our industry, and I know several of the people that are on this call, while payroll is a major expense for us, rent, because these design center buildings we're in are a gigantic chunk of what our monthly expenses. So some of us might have to choose to use some of it to help cover that over the next few months, and then just choose to term it out over the 2 years at the half. I mean, at a 0.5%, it's basically free money.
Right.
You just have to make sure you can pay it back over the next 2 years, right? So you don't want to take out more than what you know you can pay back over the next 2 years.
Right. So
okay. So if you all want to start writing your questions in the chat, Brent, did you want to add anything else before I ask some of the questions that people had?
No, we're good.
Okay. So the first question was, can we apply for both the PPP and the EIDL at the same time?
Yes.
And what are the advantages and disadvantages of doing that?
There's no real disadvantage because one's going to be online through the SBA, the IDL, and the other will be working through a preferred SBA lender. The only difference will be when it comes time to decide what you're going to do, as Brent mentioned earlier. If you take that $10,000, it's deducted from the PPP amount and does have to be paid back.
But what if you do the EIDL loan and you don't just get the $10,000 grant, but you get a $500,000 SBA loan through the EIDL? Then can you still do the PPP? And
no, because there's a maximum qualifier. The amount would never be greater than what you would qualify at that 2.5 times multiplier. Okay. So even on the EIDL, there's a limit to what you can qualify for.
And if I can just add, having processed an EIDL application recently, the documentation is far more exhaustive. The requirements, personal financial statements, disclosures of assets and liabilities for the borrower or the owner of the company. Not to mention the fact that there's no debt forgiveness portion or feature to the EIDL program. We don't think it's going to have much, if any at all, interest from the borrowers when it becomes more known what the differences between the two plans are. Okay.
All right. And then we have a question. I work as a consultant and I'm not on payroll, but I've worked on behalf of the same company or for the same company for over 10 years. Would this qualify under payroll?
$99.
I guess, Judith, if you want to unmute your mic, maybe you can answer that for them. As I understand it, if you're a 1099 subcontractor, you have to wait 10 days before you're till the 10th before you're allowed to apply. Correct.
But they are allowed to apply at that point. Correct.
Right. So Judith, you could apply on your own at that point if you wanted, but in terms of the company that you've been consulting for, they wouldn't be able to count your income towards the amount that they're applying for on the PPP.
Charlie,
Okay.
and Charlie, a related question to that is, as an independent contractor, does her expense going forward get thrown into the payroll cost bucket for forgiveness?
My understanding, and I would say yes, but I will verify that. Yes.
Right.
Because what they're looking at is forgiveness of all W-2, 1099. It's a payroll forgiveness program. So they've lumped everything together. Also with the wage taxes, healthcare, everything's in that lump.
What about?
Okay, so that, sorry. So that would include travel expenses then?
As normal expenses, you can add back.
Okay, thank you.
And then there's a question about commissions. So commissions, are they included in the payroll amount, or is it just base salaries?
Just base salaries. And it's also, keep in mind, salaries only up to $100,000. So any, if it's an employee that makes $125,000 a year, they'll only reimburse up to $100,000, and the wage tax is only up to that amount as well.
But can you, when you're applying for the 2.5 times the amount, is it based only on the 100,000, or can you base it on the 125 and then just not have the forgiveness for more than 100,000?
No, they won't give you that amount. It's only
when you're. So that means when you all are adding it all up, you add up the 100,000 plus whatever their benefits are and everything else on top of that, or does it have to be 100,000 maxed out, including
maxed out per employee? Correct.
Per employee. Okay.
So that was one of the things that Brent was mentioning when we were on early, is we have to take the gross amount, net it to come up with or subtract it to come up with the net amount.
Okay. And then going back to the 1099, there's a question. So to be clear, as a 1099 employee, my salary, quote unquote, cannot be applied for my company as payroll for the PPP program. I have to do this on my own. Is that correct?
If they are a 1099 employee, but if they're self-employed, that's the piece they have to wait 10 days. 1099 through the company, as a contractor of the company, can go in right now.
The company can include it.
That's correct.
Okay.
So as an independent contractor, no.
Okay. What if you are a small company and you only have 2 full-time employees, and then multiple independent contractors that they work with on a regular basis? By maintaining payroll, quote unquote, do these independent contractors qualify as employees of the company? Is that the same answer?
Yeah, it is pretty much the same answer. They're going to qualify to a certain point. Obviously, again, it comes back to if they're making over 100,000, that won't qualify. If it's under, they will. If they are directly 1099 from the company, then that piece can fit in. But if they're just a single person that's a sole proprietor, getting work here, getting work there, I think and this is one of the questions we asked yesterday, is how much of their payroll time on the 1099 has to be under that one company. And I think the figure that's going to come back is 75%, but that's what we're waiting for on that answer.
Okay, so Lacey, that kind of answers your question there. So as long as 75% of your income is coming from the company that you work for, then they would be able to use your 1099 amount as part of their application process for the PPP.
Right. But that would be applied for by the company, not by the individual.
Correct. Right. So, but if the company does it then on behalf of these people, then they can't apply on their own as a 1099 subcontractor also, right? Okay.
Correct.
All right. My company is a subsidiary of a Switzerland-based company, and 100% shareholder is the owner. And would qualify.
If they're paid by a U.S. entity, potentially. But that again is something we're waiting to find out. Keep in mind, it probably will be yes, because they're not asking for a personal guarantee or any information as it relates to the owner of the company. So
Okay.
if U.S. operation, payroll is done through the U.S. and the subsidiary is paying U.S. taxes, then yes.
Okay. Let's see. Is there a difference between a 1099 and an independent contractor? A 1099 employee just is an independent contractor, right? It's just the tax form that's used, correct?
Correct.
Okay. And then the next question is the PPP application provided by the preferred lender?
No, it actually is on the SBA website. Or I shouldn't say that. Yes, the preferred lender will have the PPP. Most anybody has the PPP right now, but you can get it from SBA.gov or from the preferred lender.
I'll post it along with this presentation on the on our Slack site for all the DFA members after this. So you all will have access to it there. So you'll have the presentation. You can go through. You'll have Charlie and Brent's contact information there as well. And then also later today, like I said, we're going to email out this the recording of this event along with along with the slides as well. So you'll have all their information. Are there any other questions? Anyone that wants to unmute rather than typing it in? So like I said, Charlie and Brent are available to, to work with any of you that want assistance with doing the application. They are doing this today as a favor for me, but also obviously it's an opportunity for them to potentially connect with some of you for this and for future lending needs.
Joby, question for you. Gentlemen, are there any preferred lenders that you recommend to approach that you found easy to work with?
I would look at it this way, because what I've heard about the Chase, the Wells Fargo, the B of A's, is that this program is going to be taxing for them. So I would say that it will take where they've got 1 million applications, if even they're going to do it. I would look for what I call a super regional bank that is a preferred lender, and in your market that where they're only processing 500-600 applications. That's what I would say. And outside of that, I have lenders I work with nationally and locally because I get a little preference because I do a lot of work with them. That's one of the benefits I have. But outside of that, I think Brent could probably tell you West Coast who would be, somebody that could fill that list.
Yeah, and I would add that a quick Google search, you will find rated preferred lenders, and I would encourage you to look at folks in your region if this is going to be a do-it-yourself project. But know that preferred lenders are agnostic as to the location of the borrower. So for instance, we work with East Coast centric and Midwest SBA lenders, but they're happy to lend into the California market or elsewhere in the country. So you really, if you get into a larger bank, you're looking at a loan mill, and it's going to be more and more of just you're just a number going through their program. So you want to have some touch, if you will, from the lender. It's going to be difficult to have any direct conversations with lenders because haven't been set up internally to staff this type of program. The reason why the SBA website got crashed on the EIDL program is just a deluge of demand, and they're not set up for it. So this is a whole new ballgame, particularly at this time when the back offices of these lenders are all working remotely. Banks are really the last business model that are set up to run remotely. So it's going to be a little bumpy coming out of the chute, but everyone's going to have some initial growing pains, but everyone will figure their processes down. And if you want to work with a local preferred lender, I think we're encouraging you to look for smaller banks versus larger. You got a better shot of it being less of a queue and greater access to the underwriter.
How do you and Charles charge for your services?
Joby, before I answer that, do you want me to get into this or take that question offline? I know we're not here to pitch services per se.
No, you can. I mean, the key thing for us, to be honest, for all of you, is we just, we aren't necessarily, like I said, endorsing Brent and Charlie as an organization. We just have to be careful from a legal standpoint. So I gave them the opportunity to present today because they know their stuff, and I thought it would be really beneficial to all of you as members of DFA to be able to hear what they have to say. That said, I can tell you I'm using them to do my application because I want to make sure I don't screw it up. And I've introduced them to several other of our artisan partners that we sell through the showroom here in LA, and other friends in the industry that are contracting to use them as well. So with that, Brent, you can tell them what your package is going to look like, and then people can certainly contact you if they're interested in utilizing your services.
Sure. Well, there are a few folks on this call that we've been in dialogue with over the past week, and where we've ended up is different from where we started. We thought we would have a fee that was borrower facing, but we've learned that the SBA is going to provide some form of compensation for our services. But we are going to charge a $500 packaging fee, if you will, that would be due at the time we get confirmation from the preferred lender that they have received the completed package. So we're limiting our fee to a $500 amount, and we've cleared it with the preferred lenders that they are agreeable that it doesn't violate any of the SBA rules for intermediaries.
Thank you.
I'll withhold my opinion.
But I think
it seems like, I mean, whether it's them or whether it's someone else, I think it's a no-brainer for all of us as small businesses to find someone to try to help us navigate this. You don't want your application to get in and then to be there for 6 or 7 days and then find out it's been pushed to the side because something wasn't done properly. So I was talking to a friend in the industry last night, and he had been told by his bank, just get the application and don't worry about any of the backup documentation or paperwork at this point. We'll get that to them later. And Charlie told me this morning that that's like the biggest mistake you can make at this point. You have to send everything in all at once, or they're literally just going to push it off to the side and focus on the people that have everything right out of the gate. So I think it's critically important that you find someone that knows what they're doing, whether it's Charlie and Brent or your banker that you work with or your CPA. A lot of them know what they're doing and have good SBA relationships. So you find the person that's comfortable for you, but we brought them to the table today just as an option for you as someone that you could talk to.
Well, the biggest thing about this program is the forgiveness. I mean, the fact that you can borrow, make payroll, make expenses with, a large sum and have it forgiven. That's, we've never seen a program like that. So it is a great economic program to try to maintain so we can come out of this on the backside in better shape.
There was a question here. One last question. Would you be expected to exhaust your own cash reserves before being able to apply?
Well, technically, if you look at, and I have a document here, the first thing that the SBA always asks is, have you done that, and or have you tried other sources? Well, the question's going to be, I have no more cash reserve and there are no other sources. That's why we're coming here. So it becomes a non-question then. So yes, they would expect you to have used as much of the money as possible. But this is not a program to repay yourself. This is a program to make payroll and pay expenses and to have it forgiven. All of that will be documented on the backside after the 30th of June, and they'll require proof. So it goes back to, that's why you have to right now provide all that documentation and verification to show that you do qualify and you have it. Otherwise, they can't process the loan application.
And if I can add, I think the proposition here, or the exchange with the government and the employers, is that you look at this from the perspective that the government is now running unemployment benefits through employers for the next 8 weeks for those that participate. And so they're basically paying your employees for an 8-week period up to 100, for the qualified expenses, but you're getting the benefit of that work product of your employees. And balls out there on this is going to last, but if 2 months from now, we're looking to come out of this thing, gradually. I would think there's some staging that can be done with your employees to put you in a better position to get back into business on the government nickel. So it really
great perspective.
Yeah, and it's going to provide a compounding effect. This money will be used over and over and over again. So I think it's well deployed funds given the circumstances the country's in.
Joby, will you be posting the required documentation along with the PPP app?
Yes, I'll post your PowerPoint presentation. I'm gonna put it in as a PDF for all of you, as well as the application form, and I'll put Charlie and Brent's contact information in there for you as well.
And again,
all right, we are out of time. We had a hard stop at 11:50 Pacific time, so we're just about there right now. Thank you both so much for sharing with us today and walking us through this. It's certainly been a confusing and unnerving process for me, and you guys have been a huge help for me over the last few days, and I'm sure that all of our members have found this incredibly helpful as well, and I'm sure you'll be hearing from quite a few of them with questions and requests. So thank you both, and we wish you all good health. Hope you all are doing okay, and we're going to work on some more presentations like this over the next few weeks. I'm brainstorming with my team right now of different ideas of things that we can talk about. I think there's some HR topics we're all going to have to talk through over the next few weeks, maybe some motivational ideas for work from home teams and things like that. So we're going to work on some more members only presentations like this over the next few weeks. So stay safe, stay healthy, stay home, which I didn't do today, obviously. I'm a bad person for coming to the showroom, but I'm heading home now, and we'll talk to you all soon. Thanks so much.
Thank you.
Thank you, Joby.
Thanks, everyone.